What is up YouTube? In my last video I talked about what earnings reports are and why they're so important, and today's video will be focusing on the different components of an earnings report. So whenever you open up an earnings report or income statement, the first thing you see is revenue, and that's what we'll be talking about. So what is revenue? So revenue is the amount of money generated from the sale of a company's product or service. So the next thing that could be seen in an earnings report or income statement is actually cost of revenue, and the definition is in its name. So cost of revenue is the total cost of producing and distributing of products and services of a company. The next thing that could be seen is gross profit, which is actually just the revenue minus the cost of revenue. And gross profit isn't the actual money the company gets to keep after, because there are other operating expenses. So now let's talk about what operating expenses are, because we've already started talking about it, and the next thing that could be seen are total operating expenses. So operating expenses is the amount of money it takes for a normal business to operate. It includes rent, equipment, inventory costs, marketing, payroll, insurance, step costs, research and development, and etc. So right after total operating expenses, we see something called operating income or loss. So as we have discussed before, total revenue minus cost of revenue is equal to gross profit. But this isn't actually all the profit left, because there's still some more expenses such as rent, payroll, etc. And that has to be paid off. So if we subtract gross profit from total operating expenses, we get operating income or loss. So this is basically the profit before interest is paid. Now I will be explaining that now. Now that we've talked about operating income or loss, we have to understand this isn't the total profit left. Like gross profit too, we also have to take some money out of this as well for other random expenses like interest expense, taxes, and other things that randomly come up. So we have to subtract this from our operating income or loss. After we do this, we get net income. So this is the total profit actually made. And now we come to a section called earnings per share. So what this is it's the net income divided by the number of shares, and that's how we get earnings per share. There are other things such as basic earnings per share, diluted earnings per share, but that will be explained in another video. For now, I think you've all gotten the basics of what's in an income statement, and this is what you really need to know on how to analyze a company's financials. Obviously, there are other things like the balance sheet and cash flow, which I will be talking about in my next video, and thank you for watching.